Time now for this week's Big Fat Idea. Very pleased to welcome back to the show Brent Woy at Canaccord Genuity in Vancouver. Brent, first of all, I appreciate you taking the time, but you know how we do this. Give me that big fat idea.
Yeah, good morning, Mike. Thanks for having me on the show. What I want to talk about today is sector rotation into energy stocks, and I'll give you a few key points. But for your listeners out there, what we mean when we talk about sector rotation is that we're basically trying to understand how capital shifts from one sector of the economy to another. So since not all sectors of the economy perform well at the same time, investment managers attempt to profit through timing a particular economic cycle by exiting a sector as it begins to struggle, while entering another that's on the rise. So in 2017, the technology sector has been on fire with stocks such as Facebook, Amazon, Netflix, and Google garnering all the attention, while the energy stocks have been lagging and underperforming the market. In Canada, the energy sector was down over 11% at the end of August from the previous year. However, in September, we noticed a big shift taking place as the tech stocks began to falter, while the energy stocks rose over 7%, with crude oil up about 9%, trading as high as $53 a barrel. So that being said, let me give you 3 key points why we think the energy sector looks attractive at the present time. The first is, from a fundamental perspective, we're seeing strong demand for energy products as the global economy continues to expand. Our research indicates that about 27 out of 38 OECD countries show their leading economic indicators are expanding. We haven't seen this kind of global growth synchronization since the mid-2000s, and we expect this to last for several quarters. Second key point, in terms of valuation, we think the energy sector is dirt cheap. When we compare the price-to-book value ratios of energy stocks compared to the market and the tech sector, we haven't seen valuations this attractive in a long time. You'd have to go all the way back to the major bottoms in 1985 and 2000 to see something similar as today. And finally, technically, the energy index price chart looks really bullish. We've seen prices break out from an 8-month downtrend while successfully completing what we call a double bottom formation. And this price action has also been confirmed by a shift in relative performance to the broad market during the past couple of months.
When I look at something like this, obviously it depends when you're buying in the cycle of it. How do you categorize that kind of an investment today, Brent? I mean, if it was higher prices, does that make it more aggressive? Or, because you're coming off sort of, as you say, the test of that 2016 low, where do you categorize this in terms of risk for investors?
Definitely when the prices are low, it's definitely much lower risk. But generally a period when the sector is out of favor and no one's really paying attention to it.
So is this, would you sort of recommend this for, just the aggressive growth part of your portfolio?
Yeah, definitely. I mean, it is, there's price volatility in the sector, so it'd be suitable for kind of an aggressive growth investor looking for capital appreciation.
Now, we'll step aside of individual stocks. Are there, is there a good ETF out there, exchange traded fund, for people to have a look at?
Yeah, probably, the best one to look at that we're interested in is called the iShares Energy Index ETF. Closed at about $11.87 a share on the TSX, and the symbol is XEG.
XEG. And what about if I was going into the U.S.?
The big one would be XLE, so that's priced in U.S. dollars and trades in the U.S. exchange.
And final thing, how long should, it's always also important with the time frame. Someone buys it on Tuesday and says, hey, it's not up, it's Wednesday morning, kind of thing. So how long should, again, we'll have to see how the market reacts. There's other factors that come into play. But if somebody's going into it, kind of how long should they be expecting to hold this?
Yeah, I mean, it is a cyclical sector, so we would be looking at about 12 to 18 months, for this trade to play out. But it's not a buy and hold type of investment. You have to play the cycles.
Great stuff as always, Brent. We do appreciate you taking time. Brent Woy at his Canaccord Genuity in Vancouver. Go to www.retiretoday.ca. www.retiretoday.ca. My thanks, Brent.
Thanks, Mike.